If you're looking to move home and you're currently fixed in with your existing lender, then it can become quite complicated to know what your options are. So in this video, I'm going to be talking you through those options and some things to consider. Hi, this is Sam from Rosehill Financial Services. If this is your first time watching us, then I do hope that you find our content useful, and please do share with anyone who may benefit from watching this video too. It can be tricky if you're looking to move home where you're fixed in with your current lender, because there can be quite hefty early repayment charges that apply to your existing mortgage. So here's a couple of things that you're going to want to consider. The first point of call would be to request a mortgage redemption statement. These documents will show all of the mortgage details that you're going to need. So it will have the outstanding mortgage balance as well as any early repayment charges that apply to your mortgage. The second point is to check your finances. So we're talking about your income, your expenditure and your credit file. If anything's changed, it may have an impact on the amount that you can borrow compared to the amount you borrowed when you first took out your mortgage. We always recommend speaking with a great broker early into the process so that you can understand your borrowing power currently. The third point is weighing up the options of sticking with your current lender or going with a new lender. Now, if you're fixed in with your current lender, there may be quite hefty early repayment charges that apply to your mortgage product. However, subject to your current circumstances, so your income, expenditure, credit file, deposit and so on, you may be able to port that mortgage over to the new property, avoiding any early repayment charges. Now, when it comes to porting a mortgage, it simply means that you'll be moving your existing mortgage over to your new home. Now, to make up any shortfall, if you're looking to buy a more expensive home, you would generally take out a top-up loan with that existing lender. So taking out a top-up loan, which may be on a different interest rate to your current mortgage, means that you'll have two mortgage products on the one property. This means that when it comes to remortgaging, you'll have two separate products, so it can become quite expensive in some circumstances. So this is why it might be a good idea to align the top-up mortgage fixed period, if you are choosing a fixed period, with your existing mortgage. So for example, if you had a 2-year fixed period left on your current mortgage, you might want to arrange a 2-year fixed product on the top-up loan, just so that you can align them both and remortgage onto one product at the end of those 2 years. Now, porting your mortgage may not always be an option for you. So as I said, there'll be a whole new affordability assessment, and if you don't fit the criteria with your current lender for the new purchase, then you may need to look elsewhere. You may even find that you do fit affordability with your current lender, but the particular property that you're looking to buy doesn't fit the bill with your existing lender. In these scenarios, it's just a case of working out whether it's worth moving now and paying the early repayment charge that applies to your existing mortgage, or waiting until the end of your fixed period with your current lender and then moving after that. Again, speak with a broker and they'll be able to outline the costs of both options for you to make an informed decision. If you have a fixed mortgage product where there are no early repayment charges applicable, then of course you are in a much more flexible position. And lastly, if you're looking to buy a less expensive home, so if you're looking to downsize, then porting your mortgage may still come with early repayment charges. So this is going to be dependent on the mortgage balance in relation to the property value. So certain lenders will have criteria on how much of a mortgage that you can take out in relation to the purchase price of the property, which is known as the loan to value. So with your current lender, if they have a cap on this loan to value, for example, say 75%, then you may find that you need to pay off a chunk of your existing mortgage to fit the bill with that lender, and this can come with early repayment charges. So it's just one thing to keep in mind. As I always say, preparation is key when it comes to buying your dream home, so make sure you speak with your broker early into the process to understand all options available to you. If you'd like any further information on what we've discussed in this video today, please don't hesitate to leave us a comment or message me directly, and I'll be happy to help. Before I leave you today, I'm obliged to tell you that your home may be repossessed if you don't keep up repayments on your mortgage. Thanks for watching, and I look forward to bringing you more useful content in the near future, and I'll see you in the next one.